Check where disposal took place, note number. Disposal took place in note number 6. So in note 6, the disposal proceeds from the sale of shares in A amounted to 15, received in cash. D will account for the remaining interest in A using the equity method in accordance. So they never say. So if they don't give you the net asset on disposal, you calculate. So I have a small working outside there. You can skip actually between, just skip like 3 lines. Then you say net assets on the date. On the date of what? Disposal. So you need to check how much was the net assets in that subsidiary on the date it was being disposed. Then you check how much. So the net assets, you know, if not given, check the equity components. Ordinary share capital, share premium, retained earnings, the valuation is there. So go to the balance sheet of that company. That is A. Check the equity components. Those are the net assets. So the equity components, we have ordinary share capital. We have ordinary share capital. How much? 20, 25. Then share premium, 1250. But retained earnings, we check on the date of what? Disposal, which I know they will not be willing to give us. So right there, retained earnings. But we can get. When did we dispose of A? A was disposed somewhere here. Let me check those months. It was how many months? Because we're not given, this is the only option which can help you to determine. It was how many months? 3 9. So this is 3 months, this is 9. So we want the profit on this date. You know, shares are constant. So we want the profit here. So what we can do, check the closing profit. Closing is always the retained earnings in the balance sheet. So check the balance sheet retained earnings. How much is that? 16. That one is at the close of the year. You know, I could not take it here because we want the net assets on disposal. But these two are always just constant because there was no issue of shares. Then, how much did they make for the whole year, for the 12 months period? Check P&L. In the profit account, you will get what they made for the 12 months. Profit for the year. How much? Profit for the year? 800. So to get the profit here is simple. Sure. See, 800 is for 12 months. You can apportion the 800. 800 times 3 over 12 is this side. Then, so 800 times 9 over 12 will be 9 over 12 times 8. We get how much? 600. 75%. When I quarter 800, 200. Yes. So this is 600. So to get here, you take 1650 minus what? 6. You'll get the profit which was there on that date. So just take 1650 minus this fraction there. So on the date of disposal, I'll show it here. It is the closing, which is 1650 minus 800, but 800 for 9 months. Yes, that is correct. So the entire will be 1050. Yes, 1050. So it means the total net assets on the date of disposal was how much? Add. You add. Copy? 800. 4800. Therefore, the net assets disposed, we come back here. They never disposed everything. Fine, they were having 4800, but they never disposed everything. They disposed what fraction? They disposed? Yes, they disposed a third of the 48. That is what they disposed. You know, if they could have given us the fair value of what is returned, it would have been better. But now they disposed a third. That is what we need to subtract. A third of 48 is likely to be
16.
16.
Yes.
But now another issue. In this subsidiary, was the parent controlling 100%? No. In A, parent was controlling not 100%. Parent was controlling what percentage? In A, before disposal, 75. So of these net assets, before disposal, the parent was entitled to what percentage? 75. They never acquired 100%. So they disposed a third of the 75% of what? So what you get, you got subjected to 75. They never disposed of everything. Yes, 1200. So subtract here 12. Then last, check for the unimpaired. So less unimpaired. Unimpaired what? Goodwill. Unimpaired goodwill. Done what? Disposed. So nobody was willing to give us goodwill. So we have to calculate the goodwill which was in that company, then we dispose. We have to calculate that goodwill, then we dispose. So what I want us to do, let's do the goodwill for all the three companies, S, E, and A. Though for now we want A, but the others will also catch up with us. So let's just do a goodwill computation, but we do for all of them. So have an outside working. This is the better working. So goodwill, say there goodwill. Goodwill on what? On acquisition. Goodwill on acquisition. Goodwill on acquisition. So I want us to calculate for the three of them, but for now we will be interested in the A. So let's calculate this. So cost of investment or purchase consideration. Mostly check it under non-current assets. You will get what parent invested in this entity. Then we subtract the net asset, then we get goodwill. So under non-current assets, are you able to see what the parent invested? Investment in S, parent invested how much? 67, 20. In E, how much are you saying? 46, but you must be cautious. 46 is appearing in whose books? In S. So if you capture here 46, then you are calculating goodwill in respect to S. In S will acquire E. Yes. So whatever is in S, that investment in E, parent will take, parent was controlling 80% in S. Yes, parent will, for consolidation, parent will take 80% because 46 is appearing in the books of S. You cannot, you remember tukifanya host super spot? Unakumbuka hiyo swali? Ama hiyo hata mjaisikia swali najiita host group. Unakumbuka? Yes. If you recall, then there was something like that. Okay, anyway, it's not something very serious. It was S, E, and A. So, sorry, D was there. A was not even there. A thought. So, S is the one who invested in what? In E. Paying how much? 46. Then now D has acquired S. And we agreed, once your parent has been acquired, then the parent should cease from consolidating for your books. Your books should be consolidated for by that other parent. So D is the one to consolidate for E. But D never invested directly in E. So when D went to acquire S, S disclosed that we also have another company we acquired and we paid how much? 46. So what do? So D will take 80% of that, then the minority remaining in S will take what percentage? 20%. So for consolidation, if you come here and say 46, then it's like you are assuming S is the one consolidating for E. So the investment is appearing in the books of S. So anything in S, parent will be entitled to 80. So you take 80% of this one here. And how much is that? 36? 80. Then parent invested directly in A. How much was the indirect investment in A? 44, 80. There was no fair value of non-controlling interest. So you less net what? Net assets. So net assets, we want to pick ordinary, actually there are three, ordinary share premium and retained earnings. So ordinary share capital, share premium, retained earnings. Remember retained earnings on the date of acquisition. These two, just pick them the way they are appearing in the balance sheet there. Ordinary capital across 32. We'll apportion later. 32. 2. This is 25. Share premium 16. 1,000 and retained earnings. Play around with note 1 and 2. They are calling it. Check note 1 and 2. The revenue reserve, you will see them there. But make sure you are capturing them on the dates of acquisition. So make sure when the subsidiaries were acquired, you pick the profits on those dates. Capture that. So I hope you have captured them. In note 1, B acquired investment in S and A when the revenue reserve balances were how much? 20, 26, and A was 650. Sure. Yes. Then note 2, the revenue reserve of E 24, 2010, and 2750 in 2011. So which one are we using? Can you check keenly? Are we using 2750 or 2400? And if you say you must justify. We use the profit on the dates of acquisition. So which one are we using? Yeah? 24, 2450, 2750. 6. Let's get which is which? Online, someone to talk? We have two profits, 2750, 2400. We always apply the profits on the date of acquisition. So Alice is saying, kindly let's use 24. 24. Sure. Sure. Why are you using 24 and not 2750? Huwezi shtuka kwa nini exam na naweka 2750 ama ameweka for fun. B acquired S, S acquired E. When did S acquire E? S acquired E on 1st July 2010. And what was the profit on that date? 24. Okay. When did B acquire S? When did D acquire S? 1st April 2011. Okay. 1st April 2011. What was the profit of E on 1st April 2011? 27.50. So the profit to be used here is 27.50. You know why? Even actually it doesn't even require you to reason much. Wacha niwaulize mpaka ushtuke tu umesema answer. Who is consolidating for E? Ni D. Haya. Did hiyo kizungu ni mbaya. D na E walijuana before S. D knew E through when? When they were acquiring S. So when S was being acquired, they said we also have another subsidiary. So when S is consolidating for E, they will use 24 because that is when they acquired E. But parent knew E through S on this date. So that is when they sat on the round table and they calculated goodwill on that date. What do they calculate before that was so you use 27.50.
So that the information on the website to just be relevant.
See, you confused. You went back like SPAC. So use 27.50. Alice anasema the reason why she's using 24 because of the opening remarks. Which is the opening remarks? I add this. Add for me these totals. So please get it an exam. You take the profits when your parent was acquired. That is when that other parent knew your parent. How much across? 72. 74. 57.
Yes.
And finally, 4,400. But remember, parent never acquired 100%. So net assets you have to apportion. It was actually partial method. So partially with apportion. In S, parent is going to take what percentage? 80. In E, parent will be taking 48, the direct control. In A, parent will be taking what? 75. You know, goodwill is being computed on acquisition. Acquisition was before disposal. Hata kujua utauza hiyo kampuni, so you use 75. Tuseme now imekuwa 50 hapana. So get 80 of this, 48 of this, 75 of that. Then we are just getting goodwill shortly. And that is always the serious working. Another fucking serious. How much across? 2760. 300. So now let's call the brackets, the one you bracketed, call them Y. This one is X. So goodwill is X minus Y. X minus Y. Can we have 5 minutes prayer? Sure. We're just getting goodwill, then we pray, then we continue. I've noticed some of the evening students wameanza kupata leave ya kusoma. That is so nice, eh? Yeah, I've seen some people in the library during the day. The only problem I have with evening students wakipewa leave. Unajua ni kama ka freedom mtu ametolewa jela. Sasa ni kushinda tu na Java, eh? Kwa mkono, coffee throughout. Kutembea tu. Ukipata hiyo leave, use it properly. So you should be having goodwill. Eh? What volume is it? 800, 920, 1180. Impairment. There was impairment loss. Before we look at impairment, what kind of impairment is this? Is this for this year or before? Read note 9. Read note 9. All goodwill of the investee companies have been impaired by 25%. During which year? 2015. Remember, we are in 2016. No impairment occurred in 2016. The group uses fine. So that is accumulated before this year. Remember, goodwill was from acquisition, so you have to subtract. So you less accumulated impairment. Accumulated impairment, 25%. So get 25% across. 25% is a quarter. A quarter of 800 should be 200. A quarter of 920 should be 2. But a quarter of 1180 should be how much? 295. Let me check. 295. Yes. So unimpaired goodwill, we have arrived here. Unimpaired goodwill. Unimpaired goodwill, we said is which goodwill? Right? Goodwill which has not suffered impairment. The one you are calling goodwill. So unimpaired goodwill, 600. So you take the goodwill minus impairment. This one will be 690. 690. And the other one? 1180 minus 295. 885. So now mkitafutia hiyo again. We have everything now. Just go back there. Unimpaired goodwill disposed. Remember the company which was disposed is which one? Company A. So the unimpaired goodwill disposed will be, goodwill is 885, but they never disposed everything. So unimpaired disposed, they disposed what fraction? They disposed a third. You can round off if there is decimals. So unimpaired goodwill disposed is a third of 885, giving you how much? Yeah? 295. It's taking us back there. 295. Therefore, we gained, we lost. Naweza serious working. Kama hujaulizwa kwa mtihani usiliende hapo kufanya hiyo kitu. Lapi? This is 300. 300 minus 295 is 5. So I think again, there was a gain of 5. Gain of 5. We are ready to start presentation. So let's pray, then we come back. I think 1 hour can be enough for us to do the presentation. So just pray. You also pray for this question. But you can start. Let us proceed. You go say it. Ninyi mko na stress ya mtihani wewe? So let's kick off. You know, when it comes to exam, sisi tuko na stress kwa shida. You are, have you heard that? You are reading in transit. Between students na mwalimu, nani hapa na stress kushinda mwingine when it comes to exam? Mwalimu ako na stress mingi kushinda mwanafunzi. Because, let me tell you the truth, Gilbert. To be very honest with you, Charles doesn't care whether you will pass or not. That is none of his business. Uganda ukini anasema hiyo ni hali ya kwenye Mungu alipanga. Lakini mwalimu Charles is true, tuseme tu kweli. Si kila mtu anajifaitia. Lakini mwalimu unajua nataka huyu apite huyu everyone. Imagine semekane destiny hakuna mtu anapita efa. Hata nitafika town. Ni ngumu. So you must raise the bar always. So mwalimu ako na stress, niko na stress yako. Sio kwambia ukienda kuomba utuombe. Stress ya kila mtu. Lazima. So hii stress iko kwa kila mtu. So we share. Let's share the stress. So let's do the presentation. Remind me, how are we going to do the P&L? Because now that is the question itself. Profit account, we are going to take B plus S plus E plus A 3/12. Yes. So P&L, that is how we are going to consolidate B plus S plus E, but A for 3 months. Let's kick off. Right, B group. Then we keep quiet for like 20 minutes. These things are serious. Keep quiet so that we move. So right, D group. D group, D group, D group. For the year ended when? 20? 16. So we are ready. We are ready. Shillings are in thousands, millions. Millions. So have that. Shillings are in millions. So go to their P&L. We just want to copy that one. I just bringing in small issues. So Susan is saying the light is much, but you can't see clearly what is written. But D group consolidated statement of profit for the year ended that. Ile tu ya kawaida. So we start from top, revenue. So revenue based on our analysis, revenue should be 26,400 plus 24 plus 20 plus 15, but 15 should be minus intergroup what? Sales. There was two intergroup cells. There was the 24 and there was the 60. You remember? So subtract here 2400, then also subtract 60.
So, good evening. Those who are doing advanced exam, I want to address you. We missed a class on Saturday. That was unfortunate. The same problem is still prevailing. The burial will be tomorrow. So that means even tomorrow will be affected. Yeah, so I was just requesting you bear with me for tomorrow. Yeah. Okay.
So minus 2400 minus 60. Like that. So these were the intergroup cells. There were two of them. Actually, 60 was in transit. Yes. So work out everything. What do you get? When you work out everything, is there an issue somewhere? The apportionment, yeah. UPI doesn't affect cost of sales. UPI doesn't affect sales, it affects cost of sales. In the sales, you just subtract the intergroup sales in full, profit inclusive. So Alice is saying 71,690.
Yes.
Huh? 71,690 confirm by 2 people, 3 inside the same. What is the best way to go about it? You start with 15. So 15 times 3 over 12 plus 20 plus 24 plus that one minus 2460. Huh? So cost of sales. Cost of sales, you add. This is a matter of addition. 12 plus 12. When things are easy, you whistle. You can whistle while doing it. See, whistling is done when things are.
Yes.
Or what did we say last? Did we say something last time? Yeah. Yeah? No, we said when do people whistle? When things are good. But to some researchers or some about whistling. Yeah, things are working well. Eh? Yes, they say no man can whistle when broke. So when things are good, you just whistle because it's just addition. Just whistle. Add, bio. Plus 12, but 12 4 minus. So again, you remember, we subtract again the intergroup what? Cells. So subtract intergroup cells, then to it, you add back the unrealized what? Profit. So subtract again this, I can just combine 2460 plus, I remember, unrealized profit was 130 what? 5. The two. Here there was unrealized profit of 120, this one was 15. We got 135. So when you add the unrealized profit to the sales, you are reducing sales to cost of what? Sales. Yes. Then you check depreciation. There was no depreciation. So can you work out? How much is that? You get? Yeah. 40,675 Kuna students wamejulikana. Cost of sales anapata vizuri. Lakini instead ya kuweka bracket, then anaweka hapo. They are anti-brackets. Utaanguka. Make sure what is to be subtracted, you must capture them in bracket. There are some people they don't want to capture brackets and they have the correct answers. So gross profits, how much is this? But 1015. Okay. Proceed. Unashikilia hapo. There is investment what? Investment income, we add. But investment income, I told you to always be cautious about what? Interest and dividends. Kulikuwa na story ya dividends mahali. Yes. So let's add fast. Thinking begins after we have added 3520 plus 540. Then you check the interest haikuangi sana. Dividends which were received internally. They normally classify them as investment income, but those are internal affairs. We check note number 5. Check note 5. Investment income include dividend received from subsidiaries. D received how much? From S. So that 32 America for 35. So minus 32. Continue. S received 360 from E. 540. Also subtract. Total dividends paid by D. No, this is the parent paying. So you only subtract what came in within. So what remains is what goes to consolidation. Hey, listen to this. There's something they can say which will make a difference. If they said S paid dividends worth 32, then you don't subtract here 32. You'll say 80% of 32. So parent received their percentage. But you see here that they are saying parent received 32. So it means they have already taken the what? The percentage. But if S paid 32, then you will subtract 80% of 32. Correct. How much is that? 500. Good. 500. Next. We're just proceeding with their format. But I don't want to go to distribution first. There is a company which became a joint venture. Sure. So you share. It will appear here now. Share of PAT in JV. 50%. What is the profit after tax? Which company became a joint venture? A became a joint venture. So joint venture, we don't consolidate for them. Instead, we consider profit after what? Tax. So what was the profit after tax of that company? A. The PAT was 800. So parent will take 50% of 800. But for how many months? How many months? 9. It was a joint venture for 9 months. 3 months subsidiary, 9 months joint venture. So you share that profit for 9 months. How much is that? Online map on but I hope you are following well. 50%, 800 times 9 over 12, you get 300. Credit that one there. Still, there are some issues here to be sorted. Read for me this. There was a note of 1200 somewhere. See what has not been adjusted. Number 4. Check note 4. The financial assets held at fair value through profit and loss in the books of D have not been adjusted to their fair value of how much? 1200. What was their book value? Book value was 1000. Under current assets. So current assets, those are short term. Increase in short term assets is normally brought as income. So fair value increase, financial assets, that is 12 minus 1. So there's an increase of how much? 200. Then we disposed a subsidiary. Sure. When we disposed, we gained, we lost. So gain on disposal, A limited. So we have two of them in the individual books and consolidated. So consider the consolidated one. Consider the consolidated. It was how much? There was one, it was 5, another one was 7. The consolidated 5. Okay. So consolidated 5. To me, those are the incomes we need to bring before these other ones. We can add, because there are many, though not a must, we can just proceed to distribution and the rest, but just add so that sikae mingi sana, but not a must. So how much is that? 30? 20. Let's go back to our format. Distribution. So distribution. What plus what? 32, 20 plus 23.
Yes.
Siko sawa?
Yes.
Oh, kusema ndio wrong. Lakini kuandika kutenda 320 plus 2360 plus 1360 plus 800 3/12. How much is that? How much is that? 7240. Okay, you subtract please. Administrative, admin, chap 3880 plus 2440 plus 1140 plus 900 times 3/12. There is something we normally add here, but it is not present today. What is this? Impairment. The impairment we had was for 2015. Profit account is prepared on annual basis, so there is nothing. If you want to add another plus impairment, which is not there. The impairment we are having was for the other year. You get 76, 85, 76, 85. Give us finance cost. So finance cost, we add 420 plus 0. That is for 20. So give us profit before tax. PBT. What is difficult in this thing? Knowing that umeona zikiwa ngumu na uko alliance na umeona ikiwa ngumu, so hebu waka ile therefore, so don't worry, fanya vitu zinakufurahisha, hizo ni mbaya wajana sana. But you know human beings are very funny, eh? They concentrate with difficult things. Na zile rahisi wanachana nayo. Go for the easiest first. Yeah, it is true. Yeah, human beings go for very bad things. Huh? So that one comes to how much? 16? 6, 7, 5. Income tax. Sasa, instead of let me ask you. Hiyo kitu yote tumeshinda hapa tukifanya. Sijui what again, unimpaired good goods, sijui what. Hiyo vitu yote tumefanya. Simtusaidie kupata hii 5. Ama why do you waste your time all that? When you see the straight, you analyze that P&L will be this plus this plus this plus this, then you start. What is the big issue of? Don't go to those things. You know, with us we have to do it because lazima tuweke paka mwisho. And 2, you don't know whether next time they will tell you goodwill as required. So at least when it is required, ukiwa hapo unajua kila mtu ako hapo. Lakini si ati uko hapo unachomeka na watu wengine hawako hapo. That is dangerous. So we do it so that you know how goodwill is computed, how do you get the gain. But if they're not required, forget about those things. Completely. Itakuwa tu hiyo tick moja. Alafu kwa kuja hapo waseme any 5 times 2. Kwani 5 ngapi ziko hapo? Mingi. Strategy. So income tax, what do we add? 24, 40 plus 2400 plus 500 for 3 months. Imagine, okay, each question should take how many minutes in exam? What is that? 36. About 36 times 5. 36 times 5 questions. How many minutes are those? 180. 180 divided by 60. 3 hours. So each question is 36 minutes. Imagine a group, if you are keen, you can do it within 20 minutes. Now, upate yote. Yote, 20 over 20. Now, uja balance anything. Na umepata. Lakini kama unatetemeka, you can consume 1.5 hours. Bado uko tu kwa UPI. Goodwill. Na kuna malizi kupeleka. So unajipanga tu. Take 10 minutes, actually 10 good minutes to analyze. Because from what you can see, if you analyze it properly, this one can take you how many minutes? 5. Ama 6. Ama 10. Sawa, sindio? Income tax, you get how much? 55, 45. 55, 45. PAT, profit for the year after tax. 11, 130. Nimeona wameandika hapo comprehensive, otherwise tungefungia hapo. But they have said other comprehensive income. So right there, other comprehensive income, other comprehensive income. You are seeing what? Adjustment of available for sale financial assets. Where AFS adjustment available for sale. Adjustment. In evaluation, available for sale adjustment is how much? 500. That is revaluation actually. So total comprehensive is 11,630. Single line to close. So call it total. Total comprehensive income. Like that. Then let's share the profit. We are actually done. Let's distribute to them profit. So you say it down there. Profit. Nasikimia tukachange kizungu tukasema. Hiyo ndio kizungu tulijenga. We change and we say profit allocated. And we change from profit to NCI to noisemakers. Umeandika noisemakers kweli? Usiende kwa mtihani mbele kidogo. So right there, profit attributable, profit for the year actually, because kuna comprehensive profit for the year attributable to full column. Leo wacha we're serious, controlling. You can't keep on changing them. Controlling interest. You also say what alliance or record. What we can attributable to parent, whether controlling interest and also attributable to non controlling interest. One and the same. Senior. Controlling is the parent. Yes, controlling is parent and controlling is makers. Sarah, when you get a break, just a few people are making noise. Senior. So can we skip 1, 2, 3, 4 lines? When you say NCI's profit, NCI's profit, NCI's profit, NCI's profit, NCI's profit. So NCI, they are in the three companies. Company A, we start with S, D, then A. So we want to know how much profit goes to the minority. Simple. We have always said so many times, NCI will take the profit after tax in the subsidiary. They don't take the consolidated profit for the subsidiary because that is where they are. So take PAT of these subsidiaries, the way they are appearing there. So how much is the profit after tax of S, E, and A? S, I'm saying 53. 53.40 for E. 920. A is 800, but it was not a subsidiary for the whole year. It was only a subsidiary for how many months? 3 months. So you cannot take the entire. The entire year partimony requires joint venture. There is no NCI there. So you only take for the period. It was a subsidiary, and that is where the NCI were there. So 800 by this, you get 200. Then I told you 3 things to check for when adjusting for NCI's profit. The 3 things are which ones? Bring them. Which one? What do we subtract from this profit? Impairment. So we less impairment. Impairment on one condition, that you are used to which method? Full. Full means there was fair value of NCI and you consider them when you are calculating what? Goodwill. This was partial. And even if this was full, reason being there was no impairment for this year. And this is profit for the year. So still we would have neglected. Next, depreciation. But depreciation hakuna. Kama kuna depreciation subsidiary, you adjust. Another one, UPI. On one condition that the sale is which sale? Upstream. Upstream means maybe S sold to D, maybe E sold to S, equal wameuzia parents. So can you check for me those 2 sales? Who sold to who? If it is downstream, S sold to D. S to D, that's only down. So S is the one who sold. So if S sold, then the profit of S is the one affected. So 135, that one will affect them. Please, there is nothing. So these are the adjusted profits, 200, 920. Give me this one here. 5205. Let's share. Therefore, noisemakers will take in S parent was controlling 80. Noisemakers will take what percentage? 20. In E, they had a benefit. They will take what percentage? 52. They were controlling more than the parent. It's always an abnormal situation whereby minority controls more than. It is possible. In reality, very, very possible. Very possible. Very, very, very much possible. Then A will take what percentage? 25. Parent was controlling 75. So take 20 of this, 52 of this, 25 of that. Get them. Then what you do for me, you tell me is equals to, give me this total figure. That is what I want. If there is decimals, I can work with them, no problem. This is 724. You can finish that question. Total is how much? Vincent has a figure 1569.4. 1569.4. So go and give minority up there. Go and give our minority up there. So non-controlling interest will go with 1569.4. So controlling interest, which is the parent, you take the profit, the consolidated profit for the year, not comprehensive. The profit for the year, this one here, 11,130. So this is 11,130 minus 1569.4. Yes. How much is that? 9560. What? 11,130. Then you know what next? What comes next? Total comprehensive. No. Yes. So total comprehensive. To controlling interest, then non-controlling interest. Total comprehensive is how much? Total comprehensive is 11,630. I have that. Online hapo inaonekana kweli, yes. 11,630. The total comprehensive down here. What has made the difference is this adjustment, which is more or less evaluation. Can you check for me that adjustment was in whose books? It was in the books of B. NCI will not take their lens in B because B has nothing to do with NCI. NCI will go S, E, and A. So non-controlling will not get any share of this comprehensive 500. So the total comprehensive, they will still go with this one here. So 1569.4. We will not give them part of this evaluation, this 500. The 500 belongs to parent. Unless it was in the subsidiary, is where they will share. They will get their percentage. So controlling will get 9560.6, this one here, plus how much? 500. Yes. That 500 was purely for the parent. So there is no way you can apportion it to the minority. Kwani wanakuja kwetu ndio watu wahurumie, basi wakikaa tu huko. So how much is that? Zero? Let's go to the balance sheet. Hapo tu ni 5 ticks unahitaji. Hizo tu mingi sana nazo. Balance sheet, kuna tu kitu inatushika immediately when we start, and I want to clear with it. A became, okay, how are we going to consolidate for the balance sheet? PS. However, A will also come but once. Investments. Yes, you will bring investment in JV. Other than current assets, you will bring your investment. It will appear there once. So I want us to calculate this investment. We'll just start on current assets na tutakwama. So have a working, you call it investment in joint venture. Investment in joint venture. Nataka mkuu ambassadors, hata mkiwa kwa ofisi, mko na watu wengine kwa ofisi, maybe wanajisomea, wengine wanasoma mahali. Wewe ndio unawaelezea na unatumia very difficult terms, Ukiona amezoea profit attributable to parent, unamchanganya, si ndio? So investment in JV, joint venture, sawa. So you say remaining, I can call it whichever name, remaining investment after what? Correct, after disposal. Because when we disposed this company is when it became what? A joint venture. So the investment which remained on that date. So examine hakusema kama ile swali lingine alikuwa anasema vizuri. This one was very really good information. But how much did we invest in A? Check non-current assets. How much did we invest in A? We invested 4480. Are you seeing 4480? Under non-current assets. So parent had invested 4480, but they disposed of what fraction? A third. So what remained is what? 2/3. Correct. What remained is 2/3 of that 4480. So that is in quote the investment on that date when they started on this contract of joint venture. The 2/3. Yes. They disposed a third, it remained 2/3. The date it remained 2/3, it became a joint venture. So that is the investment on that date. How much is this? 29.86. Where am I going to buy 29.87? You add post-acquisition profits. So post-acquisition profits, take 50%. And because the examiner never gave us the fair value on the date of disposal, there will be no problem. To get the post-acquisition, just check their profit in the balance sheet. How much is their retained earnings? Minus when they were acquired. From that date. What is the retained earnings of A in the balance sheet? Closing. 16. How much was their profit when we acquired them in Note 1? Note 1. 6 what? 50. So that is the profit they made after acquisition, and because you are not given that, just take 50%. You know 50%, 50-50, so there is no big issue. there, 50 there. Inakuja ngapi? 500. The examiner failed to tell us the fair value, this one, the fair value of the 2987. So there is no big issue. That investment lost, there was impairment. Impairment loss. How much was the impairment in A? Because A was disposed. A had an impairment of how much? Impairment in A was 295 or 285? 295, eh? However, it was 295 we agreed, but we disposed. So we disposed a third. So the impairment we are suffering from now should be 2/3. That is the one you need to consider. A third was disposed. So we remain with 2/3 of 295. Round off. 190. Bishop. How much is the investment? You get? That's 290. Now, that's 290. Before we go to the balance sheet, can you help me know which ticks can we get? I need 5 ticks. For any student who saw 3/12, you know 3/12 is the key issue here. Plus E being a subsidiary. So whoever analyzed the question correctly, which ticks do we get? Finance costs. No. Income tax. Admin. Distribution. Si revenue lazima mpate. Ana cost of sales mshafika hapo. Umetosha. At gross profit. Nani ndio gross profit? Gani hiyo? Gani those totals they don't have marks. Marks are here. Individual entries. Aweka tu for formality ionekane ulikuwa serious. So let's go to the balance sheet. 25 minutes. The question was long. I think we see part is what I'm telling you it looks familiar. It was very nice. However, see tumesema leo, if goodwill is not required in exam, forget about that thing. Urudi next week. Next week after exam, ukuje unitishe hiyo karatasi uende kufanya goodwill kwa nyumba. Don't. You will be wasting time for no reason. Actually, kama niongee vibaya, hakuna mtu anaipata hiyo goodwill. I'm being honest. Wote hiyo time inakuwa hapo kwa mtihani. Ni kama kuna shetani anapitanga asubuhi kuspray hiyo room confusion na kwanga. Hiyo goodwill hakuna mtu anapata. Hakuna. You see, even those who are marking, before you start marking, you must prepare. Markers wanakaa chini wanatengeneza, wanafanya hiyo karatasi. Hata wao wabadangi. Who are you? What are you? Forget about it. We only do goodwill that to the extent that it has been done what? Yes. You know kama imeulizwa kila mtu hapo hapo. Na every entry you are posting will be done what? Marked. So you are safe. Lakini wewe unangangana kitu itakute. Anything taking 5 minutes is very dangerous. So goodwill out. NCI out. Retained earnings out. UPI you have to do. Because UPI ukimess, itakumess kwa inventory in the balance sheet, it will also mess with the cost of sales. What I want is the analysis of the question. Once you analyze perfectly, analyze mpaka hata uombe ruhusa, useme unataka kwenda hapo nje, urefresh tena urudi, uendelee kuanalyze proper. Na kuna watu wanakosea kuhesabu months. Hakuna kitu kama 8 and 4. Okay, zinakuanga but very rare. Hizo months zinakuanga 66 ama 39. Ukiona hapo inakuja Two. What date? Ama quarter 7 ni mbaya zaidi. Wacha useme Mungu. Today we don't want confusion. So let's go to this balance sheet here. Wengine na wanapita, wanapata 13 marks, wanasema 8 and 5. So D group. We don't have any other option. And for those of us who are doing auditing and leadership, those subjects are not jokes. Those people who have attended before can tell us. They are very difficult. You make sure you check them with 3 eyes. They are very hard, by the way. When they are examined, also audits. Make sure you are very. Give them equal chance. You know, ukitembea library, you get everybody. It is FM. Upezi pata mtu amekaa serious. Kama nasoma auditor yuko serious. Ako na earphones na ako na juice. Wale mnawajua? They are well known. So give us here. And let's be serious again for 10 good minutes. So non-current assets. Non-current, no. The right class. PP, 2 things unaangalia, revaluation, UPFA. None of them is here. Examiner is aware, by the way, for foreign and disposal, rarely will you get those things. Examiner is aware you are tired. Where you are, tumetoka? Hakuna maneno mingi. Add 8760 plus 22 plus 45, and there is no apportionment. But you want to cut a balance sheet. Very dangerous. Very, very dangerous. So Alice already 15 for 60. 15 for 60. Next, investment in S and E replaced with goodwill. So goodwill, can you check where we computed the goodwill? You take the unimpaired. The unimpaired goodwill is what we want for S and E. 600 plus 690. 600 plus 690 should give us 12. Proceed. Investment in A. A became a joint venture. So you say investment in where? In joint venture. We have just calculated it somewhere there. We got 32. 3290. The immediate working. Available for sale financial assets. Available for sale. Your story 3,000. Wisha. Yes. And you get 23. 23,040. Give us current assets. Current assets, inventories. Inventories. Let me adjust my way, then you tell me whether everything is in order. So inventory will be imepangwa style gani? 21 plus 22 plus 1650 plus 60 minus 135. Are you understanding all those adjustments? Yeah? The 60 were the goods in what? Transit. When goods are in transit, debit the stock account. Actually, how it is adjusted, when you debit back your stock account, then to your debit. So in the receivables, you will subtract the goods in transit because when you sell, una invoice. Yes, so you debit the debtor's account, unatuma goods. Hawajapata, so remove the debt. So you will subtract from receivable, then you add them back to stock. Then 135 was the unrealized what? Profits. Correct. How much? Yeah. 50. 58.75. Proceed. Receivables. 2640 plus 66 plus 500 minus intergroup debts. Tafuta mahali kulikuwa na sijui they owe each other, but don't subtract the one related to A. The rest, note number 7. Due from D to S to 50. Due from who to who to 40. Minus goods in transit. When you sell goods in transit, kama haijafika huko, kuja utoe hiyo deni. You cannot tell them to pay and they're bossing the goods with their own eyes. So add it to stock, subtract from receivables. Please indicate in your books. But nyinyi mnaelewa. Kitu kosho umeelewa kabisa usiadjust. Ndio mtu atakuja late. Shangae, hey, these things are dangerous. When you see receivables unatoanga 60. Wewe pia ukiulizwa useme hiyo siku hakukuwa na mood. Alikuwa anaandika tu. Haya, how much is that? Let's answer like it first time. Board is not very clear. Hii board siku inatusumbua, especially kwa Susan. Haya, you are saying what? 91.90. Proceed. Cash and cash equivalent. Whatever I used to read, and a cash. Financial what? Financial assets. Ilikuwa 1000 lakini walisema fair value sahihi ngapi? 12. So unakumbuka hiyo 12? Yes, they said it's supposed to be adjusted to this fair value of 12. So wake up for 12. Proceed. Cash and cash equivalents, bigger cash. 400 plus 22 plus 300 plus 15. Tell me where 15 is coming from. No, tell your neighbor. Neighbor, who is away neighbor mwingine? Tell me where 15 is coming from. Uh-huh. 15 is what? Proceeds. Proceeds of corruption. Proceeds on disposal, that cash, top up there, take up of proceeds. How much? Waivers adjusted. Huh? 40? 4,400. Total assets. Imagine this is one question. 4 remaining. 4 remaining. Time really flies that day, yeah? hiyo siku mwenye amefanya nini? Alisema akiingia exam itakuwa 5 hours.
Atakuwa exams, itakuwa kwa-
They will do exams. People just go to school. After there's no need to go to school. So I'm not going to school. I'm going to say there is no contribution. You have the country principle. It's a level class. Which principle will apply there? You tell the teacher to start afresh. So at least 43,705. 43,705. Equity and liabilities. Equity and liabilities. Do you know the way we started? The way we started is not the way we are right now. Huh? Even the rate at which at least today is giving me answers is not the same. Huh? The learning curve imeenda juu. And by July, things will be okay. Ordinary share capital. Ordinary share capital. Ordinary share capital. Parent only, eh? Copy. 6,000. Next, share premium. Share premium, how much? 3,000. Revenue reserve, which is the retained earnings. Story for another day. Non-controlling interest. When God will give us time, then there is something. You will see up on note 4. Check that note number 4. Now, by the way, you know, passing exam, especially this paper, it does not need at your class with your UPI and the rest. It depends on so many things. Do you have courage? Unajua unaweza get exam mshtuke. Upate watu wa kona ile kona. Wana discuss vitu na unasikia wake club. Wanasema hapo iko sawa. Like there's a student who made us almost to fail. I think it was economics. He came to exam room. I'm sorry to say this, but it's the truth. He was smartly dressed, mpaka kona tie. Unajua tukashtuka, na akaanza kutupea story. He works in the controller, budgets, do what? Story mingi na tuko section 2. Na tunafanya economics, na is the hiyo economics yeye ndiye anafanya in reality. So tukashtuka, huyu ndiye anajua hizi vitu za ukweli. So after that I engaged him. He told me that yeye alishtuka, aliona hawa ndio young tax wanasomanga throughout. So yeye pia alishtuka, sisi pia tukashtuka. Exam room unakuta mtu wako sawa. Tukashtuana. So ukienda exam room unaona kama si wanasema when you are driving you are the only sober person, eh? Even in exam ukiwa pale wewe ndio uko na wewe ndio unajua hizo vitu. Because I remember there's a day na najua imeaila kufanikia. Umeenda kwa exam room hata hujui exam unaenda kufanya ni gani. Sio kama umejipata kwa kitu kama hiyo. Also hapa kamba. Hata hujui unit umesikia tu kesho ni mtihani. Unaenda tu. Na unakuwa serious, eh? Wewe pia unangoja karatasi. Na mwenye neighbor pia naona wewe uko serious. Hakuna. So ukiwa hapo unasema watu wa alliance ndio wako sawa. Note number 4, the last bit, there is a problem there. The last bit of note 4. Revenue reserve of D, that is the retained earnings of D, include the fair value adjustment of available for sale financial assets. Ebu angalia hiyo available for adjustment of available for sale financial asset. Enda kwa income statement. Go to the income statement, profit account, other comprehensive. Other comprehensive. Are you seeing it? Adjustment of available for sale financial what? Asset. That is a revaluation. Other comprehensive are revaluation. There is no way. Okay, someone can neglect it. It will still balance if it is to balance. But there is no way you can classify revaluation as part of retained earnings. So I want to separate it. So when I'll be doing retained earnings, I'll subtract that amount. Is how much? 500. We'll take it out of the retained earnings account. So bring it here. Available for sale. In fact, call it this way. Available for sale reserve. Available for sale reserve 500. When we are doing retained earnings, remind me to remove it from the profit. So someone might fail to remove it from here, then to capture it here, then just include it in retained earnings. Fine, it will still balance if it is to balance, but now that is wrong. All right, let's proceed with things we can manage. Here's what I think we'll share, Peter. How many marks? 10. But balance sheet, you have to get 10 ticks. You have to get clean 10. So I put 5 times. Unless balance sheet is required as a loan. Give us here non-current liabilities. Non-current liabilities, I want us to finish. We have 12% loan stock. 3,500. Deferred tax liability. What is not working? Add for me this first. 2660 plus 22 plus 370. How much is that? But they don't fear group. You can even start with group in exam. When you are fresh, it's doable. Neither two. Neither two. Walk ahead. How much do you get? 5230. Current liabilities. Current liabilities. Payables. Payables. Kasirikia mtu mkubwa na kuna kitu unaweza fanya. Unakutana na mtu hapa Moyabe ni after exam. But mwalimu, let me tell you the truth. FR imekuwa rahisi. Mimi kitu kimenikosea ni time. Especially retained earnings imeniweza. Nilisema uachane nayo. Nani tena amekutuma huko kwa retained earnings? Leave that thing alone. And retained earnings is what has wasted my time. Otherwise, leave that thing alone. Completely. 2020 plus 3,000 plus 790 minus intergroup debts. Sure. Yes. Yes, there was 250 and there was 240. Yes. So the two are intergroup debts. Subtract from payables and receivables at the same time. Joyce, I'm really struggling with this board, but I know you are trying to follow. So how much is that? Yeah? 5320. 5320. Current, where watch up andika tax. Add 2340 plus 22 plus 67. Here, not working. Add. So like right now, 3 minutes to 8. So Mark anasema 3 minutes remaining. Are you 3 minutes? Kuna question 5 ulikuwa umeandika theory lakini hukufanya 1. Una post hiyo na unaenda kwa hiyo theory. You write as if you know them, eh? Kizungu tu yezi kushinda. Joyce is asking. Utume board, eh? Big a board to kindly. So how much is this? 50? 5210. Quisha. And as usual, We normally say we balance. So 43,705. Let's start with NCI. Let's compute our NCI. NCI is in S, NCI is in E. A became associates, joint venture, I mean. So let's calculate NCI in those two companies. That is going to be easy. Because we were not given the fair value, sure. So do compare fair value of NCI on acquisition. When you are not given the fair value of the minority, on acquisition, take the total equity of that subsidiary. So total equity of SE. Just check in the balance sheet. Total equity of S and E, 10,400, and the other one, 51, 20. Plus. My problem is with S. S, the total equity is 10,400. But S, kuna siku walikuwa invest. S is the one who had acquired E. Sure. So they acquired E. And they paid how much? In their books. Check the investment in E in the books of S. It was 40 what? 46. That 46 is now being consolidated for by who? Parents. So you need to subtract. Less investment in E. It should not be there anymore. Investment in E, 46. That one, get it out. It should not be there. Parent has taken their share, so here we just take what remains. Then there was UPI in S. It is affecting equity. In what sense? Equity, there is profit, retained earnings. So that 135 should be subtracted from there. Nothing. Quisha. So can you give me the adjusted figures? Impairment not adjusted. Depreciation absent. It's as easy as that. So how much will the NCI be? S, if you adjust, this one is 5120. How about S? 5665. 5665. And therefore, noisemakers NCI in S give them 20%, in E give them 52. 52, sir. 2052. So for 20, eh? 11? 334. 0.4. And this one? 26? 62.4. Can you combine for me the total NCI? This plus this? Eh? 37.4. Balance sheet. Give me the retained earnings as the balancing figure. Online, I'm trying more of figures. Just let me watch over. Okay. So give me the retained earnings as the balancing figure. We confirm, then we go where we are going. So there are people here who are going back to the office. Right? Aba? Hakuna watu wanarudi kwa ofisi sasa. You have 24 hours. Okay, then you people are lucky. Yeah, I'll be working up around 11 before I leave. Yeah. Are you writing? Kisha, mtu anipatie retained earnings as the balancing figure. This is 3795.5. 4. You are saying the balancing is how much? 11,149 point subject to. Let's confirm. Let's confirm, then we are good. Let's confirm this. Retained earnings. So retained earnings. Retained earnings. You know that there are so many ways. You can start with brought down. Where brought down, it takes a lot of time because you must start from the closing, you subtract for the year, you figure. So you can go for the closing, you take D. For D, but carried down, remember you are taking the carried down values. So go to the balance sheet. Carried down is always the balance sheet. So go to the balance sheet. For D, how much are you seeing? 95? 80. The problem I have with that 95.80, they said that carry valuation was included. So subtract. That 500 should not be part. Now we'll indicate that available for what we sell. It should not be part of the profit. So what remains? 98. Then for the subsidiaries, you just don't take the carry down like that. You take post what? Post acquisition, retained earnings. Of all of them, for all of them, which is easy, the post will be closing in the balance sheet minus pre-acquisition. For all of them. So that will be quite easy. So for S 80%. So can you check S in the balance sheet? How much is the retained earnings? 56 minus the time they were acquired, so that we bring what we got after acquisition, not 1. 26. 56 minus 26 is 3,000. 3,000 by 80 should be 20, which one? 24. Then E, they will take 48%. Check E in the balance sheet. 2120. E in note 1. In note 1, when E is note 2. Note 2, we say 2750. That is negative. Okay, but you're in the right direction, so no problem. So 2120 minus 2750, 48%. What will you get is a loss. Is a loss? A loss of how much? 302 point? Wake up. 302.4. 302.4. Then A, 50%. Here tumefanya mahali, kuna mahali tumefanya 1650 minus 650. I still remember 500. We did it somewhere. I want to bring the obvious. There was UPI. So less UPI 80%. Parent will take 80% of 135. Now it is about parent, not NCI. 80% of what the profit which comes is that of the parent. Minority be our, so for parent, 80% of 135. 108. Impairment. Hata kama ni accumulated, you know, retained earnings is also accumulated from previous years. Sure.
Yeah.
Yes. So less impairment. Impairment. Check for me impairment in the books of S, E, and A. There was 200. 200 plus 230. This other one was 295, but we disposed a third. So you take what fraction? 2/3 of the 295. Yes. Well, tulipata 197. 2/3 of 295 was coming to 197.
Yes.
So add with this other one. Let's be at par. I don't want to interfere with space. Kuna vitu zingine mbili naona nataka kuambia mu adjust. So let's be together. So when you add everything, 200 plus 230 plus 197, what do you get? 627. Subtract 627. In the individual books of the parent, there was a gain on disposal. In the individual books. So let happen. Gain on disposal. So check. There was 7, there was 5. Which one was individual books? 7. Credit there 7, you add. So add that gain on disposal, 7. Also in the books of the parent, there was fair value, 200. So in the books of the parent, it will have an impact. So add fair value increase, 12 minus 1. Fair value increase. No. 12 minus 1, it was giving us how much? 200. Can you add that thing? That is where our thinking has stopped. Online, I hope you have understood those two adjustments. The gain, individual books 7, fair value adjustment, the 12 minus 1, 200. Can you confirm whether it is in line with the figure you gave us? If it's not the same, we are very tired. We go home. Iko sawa? Kama iko sawa useme iko sawa, nasema as usual. Iko aje?
As usual.
Yes, as usual. Please don't try that one during exam. Utachoka bure. Even you can't remember those things. It's not easy. Hakuna hiyo time. Office ni sawa. On one condition, unang'ara ukijua ni sure base. Si ati umeng'ara the same as the next semester bado wanakuona. Bado pia uko na wao. Joyce, where exactly do you want me to repeat? Joyce? Hapo kwa the last gain, weka hiyo gain, there was gain on disposal but individual financial statement. It was 7. Joyce, I'm repeating. Individual books was 7. If you are not there, I'll share this video. You will be able to see. It was 7 when we started. There was individual gain in the books of parent. Then fair value increase. There was financial asset 12. It was to be adjusted to 12 from 1. So I hope you understand. I want 10 ticks from the balance sheet. Tell me where we are getting the 10. We need 10 without struggling. Ordinary. But who is getting these answers? Mtu alijua E out. Ni E ama ni A? A. Lakini kama mtu alileta A. Imagine huwezi toka, si hata hizo peke yake, huwezi toka bure. Mtu alisema sasa yeye alisahau, akaleta mpaka A. Yeye amesikia after exam, ati yeye ilifai yaachwe. Bado atatoka bure. Atapata hizi, ona. That person will get this one. This one here. Kuna zingine huko. Loan stock. Napata. Even VAT tax. Hata hiyo hebu kuwa na hii. Hakuna ingine? Sasa mtu alijiconfuse kwa mtihani. 4 out of 10. Bas. Mtu wa alliance ngoja hajajiconfuse, alikuwa in the right line, ni time ndio ilimsumbua. Hizo 4 lazima uweke chini. Which alarm? Bibi shwabe, sio? Proceed. Even that 3. Sio? These 3 hata ilikuwa na waki, hata ule mwingine angepata. 5. Even mtakumbuka goods in transit. Lazima. Atushaona nani? Receivables. Hii cash utasahau si kila siku. Hiyo lazima upate. Hizo 10 ticks you should get. Here you should get 10. Na hapa unafaa kupata hizo swali yote within 20 minutes ukijipanga. Unless ukuja hapo at leo NCI wants to know who I am. So I'm not giving you assignment. Assignment is this question. Go through it. We meet on Saturday. Thank you. So now, weekends. Please, I appeal. Nimegundua hakuna weekends mingi. There are like 3. Na unajua tumebaki na reconstruction na EPS. Those two topics are very crucial. Cash flow is part of group. Group ijaisha bado. So please just bear with me. Kanyage, because nataka kuacha by 24th. So thank you. Ngapita. Kwani akina nani watapita hiyo mtihani?